In one way, good morning.
Good morning to you.
I guess in one way you could say this is a reminder that Europe still has an issue with its banks. But there's a more positive spin you can put on this story surrounding what's happening with Santander taking over Popular, and that is that the mechanisms that have been put in place are working. The ECB's been involved, the SRM's been involved, it's taken a view on the bank, it's said it needs to either be wound up or it needs to find some sort of private acquirer, it's written down the bulk of the assets, including the CoCos, including sort of what should be written down under the kind of structure that has been put in place. This is working.
I agree with you. I think this has been seen by the market mostly as an idiosyncratic event. It also happens in Spain, so we need a disclaimer there. Spain is a market where people have worked a lot on the banks.
Yep.
There's been an ESM injection of capital years ago, so the numbers are well known. There's growth. You
Yep.
shouldn't forget about that.
So that's the backdrop as well, so you can do this against that kind of positive backdrop.
Exactly. The backdrop for Spain with growth, low rates, banks being removed out of their systemic issues, I think set Spain in a very different light, for instance, to Italy. But I think, as your read is correct, this is seen as an idiosyncratic event, so not treated with the macro or systemic consequences. And we see that pretty clearly across the credit spectrum. Please.
But Francesco, European banks still have big problems ahead of them, even aside from Italy. I mean, the fact that they just don't make any money is a big problem, right?
I would agree with that. I think it's a global problem. It pertains to how people value banks under tighter regulations, capital needs, and with a low interest rate environment. But, you know, I think if the outlook here is for curves to steepen a bit, for a reversal of monetary policy into 2018 across the US and Europe, I think the outlook for banks remains a positive one. And as I said, we see growth in Europe sustaining.
So is now the time, Francesco, to invest in banks, or has that time already passed? Have we kind of bottom ticked the banks here?
Look, I think position in European banks in particular has gone up a lot since the start of the year versus index. I think people are square or slightly overweight. I still see upside. I mean, that ties into our view of growth and rates higher in the euro area. But I think opportunities like this, where you have an idiosyncratic event taking the whole index down, should be seen as a buying opportunity. That would be my view.
Let's talk more about Draghi's view and try and figure out exactly how he's going to see the world right now. You talk about this kind of this gradual change that we're going to see emerging from the ECB. It may start tomorrow. It may start towards the back end of this year. But your sense is that we're pointing towards the exit right now. Do you think that can be started before the Italian elections?
Yes. I think the ECB will be careful not to get associated with political events. Obviously, they'll be looking at them for their systematic consequences. But as long as they remain local events, they will conduct monetary policy looking at macro indicators. And I think the macro indicators currently tell us that growth is strong, above potential. We're obviously coming from a very large output gap, so that's
takes a while to fill.
Takes a while. Credit has surpassed, I think, by a vast margin, their own forecasts at the ECB, so they're quite happy about credit origination. Banks are flush with liquidity, so all that is positive. I think where the problem still lies is on the inflation outlook. But it's, again, a global phenomenon. We haven't seen inflation.
Is that the wrong metric for the ECB to be looking at? It's meant to be its metric, but is it the wrong one?
I think the unfortunate thing is that that's their needle in the compass, as Trichet used to say.
Precisely.
So to the extent it forces them to do things that probably are not compatible with the overall mix of things. I mean, if they had a dual mandate, perhaps you know, they would be talking a slightly different language. But having said that, I think that the QE is, the net purchases, at least from QE, are going to be gradually faded. That's, I think, a market view, a very widespread market view. Where I think the market is getting the message wrong is on the front end of the curve. We've seen taper tantrum in the US being a problem of a misunderstanding about the reduction of net purchases being associated with rate hikes are coming. And I think the ECB will be very careful not to let go of the front end of the curve. They want full control of that front end of the yield curve. And I think they have plenty of scope to achieve that.